No, that is because of the farmer, the trade stocks, the phos sales grew by 6%. So that is one thing. So that growth as far as farmer is maintained. Of course, we have taken a significant price increase in the NPK portfolio in order to maintain our profitability. So just to give you an example, a bag of DAP today sells at 1350 rupees a bag, whereas the complexes range from 2,100 to 2,500 rupees a bag. So there is a significant difference for a farmer because of the way the current policy is. So we have ensured that we pass on the increase partially to the customer, and we expect government also to address partially the cost increase which has happened.
Got it. And so this last question before joining back in the queue is in terms of building our non-subsidized portfolio, aluminum fluoride is something that we are going up ahead with. But do you see that this aluminum fluoride would be catering to which industry? Like there's a clear demarcation between a lower grade and higher grade. So what is it that we are targeting?
Mainly it is going to target the Orissa area where aluminum industry is there. Okay. And we have done our study properly, and we feel actually being a strategic player in Orissa, we should be in a position actually to without much greater difficulties should be able to market it and sell and market it.
Got it. Thank you, sir. I'll just join back in the queue.
Thank you. We have our next question from the line of Sukrit Patil from Eyesight Fintrade. Please go ahead.
Good afternoon to the team. First of all, congratulations on a good set of quarter. My first question to Mr. Nambiar is, beyond the regular outlook, just want to understand what are the top 2 to 3 execution priorities you are focusing on in the next few quarters? And alongside that, what do you see as the biggest risk in demand shifts or competitive pressures? And how are you preparing to manage them while sustaining Paradeep's position in fertilizer and in the fertilizer space? That's my first question. I'll ask my second question after this. Thank you.
If you look at it, one clear signal we have given in the quarter one is there's a tactical shift towards profitable product is coming. We have got a long-term view in terms of NPKs, which is very strong, and all the capacity augmentation which is also going to happen has got a huge thrust coming out of NPK. But we know this is unprecedented time in our business, which is coming out of the conflict in both Ukraine side as well as in Hormuz side. So we can't be just sticking to what exactly we've done. So this is a small-term tactical shift is going to come. So we are still explore actually whichever the product which we can manufacture and happy to report that actually we are one of the company who has got maximum product portfolio capability to manufacture in our facilities. So that definitely we will be leveraging it. And wherever the price advantage comes because of our supply chain logistics is quite strong in terms of the sourcing facility, we will be exploring various areas where we can optimize the supply chain. Coupled with our coming capacity expansion in both phosphoric acid as well as the big expansion which is expected in 29-30, these are 3 to 4 areas we will be concentrating in the coming 2 to 3 quarters.
Thank you. My second question to Mr. Singh is, on the commercial side, what are the key priorities you are driving in terms of market expansion, pricing, and customer engagement? And what risks do you see in the distribution or regulatory framework, and how are you preparing to mitigate this? Thank you.
Good morning. So there are 2-3 priorities. One is from a future-looking priority as a market development. See, we are building up a portfolio of high nutrient use action products in the portfolio, so which is our nano category, and we are growing significantly into that category. As far as the market is concerned, apart from the current supply chain risks, there is also a challenge as far as the monsoon was concerned. But however, July has been a good month for the rainfall. So how we trying to address the market requirement is the balancing between our NPK and DAP portfolio. DAP, the demand remains quite robust because of the price point which the government has kept per bag of DAP. And we are, if you see our growth, both the farmer sales and the primary sales, we had a significant growth. And if you look at the farmer sales, I think the industry growth of phosphatic, DAP and NPK has been around 1%. And we, as a company, we have grown around 15-16%. So we maintain our leadership position as far as market is concerned. We also maintain our leadership position as far as product pricing is concerned. So we are very conscious that we are going to drive growth which is profitable. So that's how our market strategy is today coming.
Thank you and best wishes.
Hello.
Yes, sir. Thank you. Thank you for the guidance and I wish the best of luck.
Thank you. We have our next question from the line of Riju from Antique Stock Broking. Please go ahead.
Yeah, hi sir. Hope I'm audible now. So my question is regarding the sales volume data that you have reported. So in the PPT slide 4, we have seen that the total fertilizer volume is 9.85 lakh ton, right? But if we calculate the product as detail, that is DAP, NPK, urea, TSP and MOP, the count is coming at roughly around 10.03 lakh ton. So just want to understand the math here.
I think you would have counted the Zipmite sales probably into it. So if you consider the DAP, NPK, MOP, that is around 9.85 lakh metric ton. But if you also consider the Zipmite, which is a soil conditioner, then you're right, it's a million ton plus. So that's around 15,000 tons of Zipmite sales. If you add both of them, it will be a million. Okay? Otherwise,
understood, sir. Understood. And sir, in terms of the sulfur sulfuric acid capacity that we have right now, the excess capacity. So how are we selling that? I think we might be selling it to outside. So how much additional EBITDA that we can make from that sulfuric acid by selling to the outside as of now?
Vijay will take it.
Right now, we are completely utilized, the sulfuric acid capacity. No, we are not selling outside right now. So entire thing is, consumed by our fertilizer facilities.
No, sir. My question is regarding at the Paradeep facility we have expanded the sulfuric acid capacity from 1.4 to roughly around 2 million metric ton, right? And the phosphate acid capacity that will come in the 2Q of FY27. So the excess sulfuric acid capacity, how you are utilizing that?
I will explain you. Basically, we don't have any excess capacity of sulfuric acid in Paradeep. Even if it happens, it could be some fluctuations on a short-term duration may be happening. But if you look at it, sulfuric acid we are using not only for the phosphoric acid production, also N20 being sulfur-dominated product. So a lot of amount of sulfur goes there also. So as of today, if you ask me, actually we don't have an excess kind of a capacity on a sustainable basis from Paradeep. But obviously there's some smaller quantity here and there we might be trading, but it's not a significant thing at all.
Understood, sir. And in terms of the power generation, the co-power generation from sulfur to sulfuric acid, are we selling any excess power to the grid as of now in this quarter or maybe in last quarter?
Last quarter we have sold at beginning, but then because of the fluctuations in terms of sulfuric acid availability, we have not done much. But the facility is available for us.
Okay, understood. And sir, one last thing in terms of the urea. So the Goa urea facility, I think the GCal improvement happened in the last quarter. So how much EBITDA per ton that we have been able to achieve this quarter, and also in terms of MCFL urea plant, so the EBITDA, the benefit that we are getting as per the old policy that might have expired in last year. So how we should look at in terms of EBITDA per ton for the MCFL plant as well for urea?
Yeah, regarding the urea policy, I think it has been notified. The new urea policy has been notified yesterday. So we are evaluating that policy. But if you look at the policy and vis-a-vis the energy benchmark, what we have right now in Goa, the impact will be around 1,500 rupees per metric ton positive. And there will be a reduction in Mangalore of around 700 to 800 rupees per metric ton. based on the new urea energy policy. And this energy improvement, what we are talking, we have invested and we have this has been completed and it has been capitalized and put to it has started this getting the benefit from this year, this quarter. So energy has been reduced by 0.2 gcal, on a urea production basis for this year.
So, sir, accrued benefit in terms of EBITDA for that?
So that's what 0.2 means. Right now this due to this energy impact will be 1,000 rupees per metric ton.
Okay. So what a normalized basis can we expect that it might have improved by roughly around 700 to 800 rupees per ton at the EBITDA level for Goa urea?
In the Q1, yes, you can assume.
Yes.
Understood, sir. And thanks for clarifying all my questions.
Okay.
Thank you. We have our next question from the line of Parth Sodha from Trinity Asset Managers. Please go ahead.
Hello. Hello.
Yes, sir, we can hear you.
Thank you. And first of all, thank you for the opportunity. So my question is like, over the medium or long term, what percentage of EBITDA do you believe will come from non-subsidy business such as industrial chemicals?
Can you repeat the question?
We continue to focus on fertilizer, as we said earlier, and the sustainable EBITDA guidance that we gave is 5,000 rupees at the moment, which when we complete our backward integration, everything should be improved by 30 to 35%. As far as the non-subsidy portion is concerned, I think that will take some time to evolve. And over a period of time, the long-term vision is that at least 20% of the EBITDA should be supported through non-subsidy. But that's a long-term target that we have kept for ourselves.
Got it. Thank you so much.
Thank you. We have our next question from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Sir, thank you so much for the opportunity. Sir, I wanted to understand currently how much of raw material for this aluminum fluoride, the FSA, is currently produced in-house, and what are we doing to that? Are we selling it outside, or are we incurring some effluent treatment charges because if you could help us understand on that, right?
Currently, we are producing around 9,000 to 10,000 tons per annum, and all these quantities are sold to outside parties. The crux of our investment is actually how do we make sure that we get the value, much higher value from what we've been selling as a raw material to other parties.
Got it. And sir, if you could help us understand, because it seems that this product is very critical to aluminium smelters. So how is the criticality of this product? And sir, have the validation started for this product, or will there be a gestation period post the 24-month commissioning of this plant?
No, good. This is basically we are just starting actually. The board has given a go ahead, and we just started the engineering. So engineering, construction, and commissioning should be 22 to 24 months. And we don't see any challenge in terms of the marketability or sellability of this product.
And I thought it is getting sold. And just to add to Mr. Nambiar, a lot of work has gone in background before we took it to the board. So everything is established. We just need to complete the project in next 24 months and get it rolling.
And also to your understanding, there's a lot of import happening in this particular product. So with this, we should be able to make sure that the Indian manufacturing setup is able to complement and reduce the import of aluminum fluoride.
Yes, sir. So my question was similar lines, because of all these imports are of a different specification versus what it would be that Paradeep Phosphate would manufacture. So will it require some gestation period with the smelting customers for testing out our product and then verify?
No, it won't be. It won't require any gestation period.
It is readily marketable.
Yeah.
Got it. And sir, how much capacity can we increase? Because we are manufacturing 10,000 metric tons of FSA. So how much can we extend this 15,000 metric ton of capacity to?
15,000. We are currently designing in 15. Why 15 is because the expanded capacity we are expecting within 2 years, we should be in a position actually to utilize entire hydrofluorosilicic acid to aluminum fluoride.
Okay, got it. Sir, that was from mine. Thank you so much and all the best.
Thank you. Thank you.
Thank you. We have our next question from the line of Dhruv Muchal from HDFC AMC. Please go ahead.
Yes, sir, thank you. So a few questions. So firstly, on the traded, can you share the traded volumes this quarter, X of urea?
Yeah, the traded volumes is done is total 1.25 lakh metric ton, including the MOP, TSP, DAP. The major imports which are coming, the arrivals are happening in July, August, and September.
Perfect.
We have almost secured around 500,000 tons of imports for the Rabi season. Yeah.
Okay. And sir, now what we are seeing right now, for example, the shift in higher sales of DAP and relatively lower sales of NPK. I'm just trying to understand how does this work in the market? As a structural strategy, it is the market wants to shift towards NPK. I mean, it seems that's the push, given the better profitability and also better farm economics, probably better for the farmer. But this, raw material supply chain issues, the government policy actions, and all those creates this disruption. So I'm just trying to understand. Say, for example, the farmer shifting to DAP today was an NPK buyer earlier. How soon does he come back to NPK if the prices normalize? I mean, what kind of resistance does that happen? Because these kind of policy, then otherwise you have this disruption, and then the movement towards NPK then probably becomes slow. So I'm just trying to understand how does this, move, and how do you see this?
So 2-3 things. I think first is fundamental. See, the entire market development effort and our farmer engagement effort is to create awareness of the balanced fertilization, which is basically phosphate, potash, micronutrients, and even organic carbon, which is very essential from the agriculture context. As far as the short-term context is concerned, see, farmer, we've done most of our awareness campaigns, shifting him from conventional straight, let's say, DAP fertilizer to an NPK mix. Currently, the difference is quite stark between NPK prices and the DAP prices. And hence the farmer shift which is there. But a lot of farmers, especially in South India where the awareness levels are much higher, they still continue using the NPK portfolio. And we see still NPK as a dominant category. But yes, as far as the current season is concerned and maybe Rabi, as long as the urea and DAP prices are held at a special price for the farmers, you will see a shift happening as far as uptake of DAP is concerned. But I don't see that as a fundamental concern from an overall strategy perspective, because farmers are aware about the use of the balanced fertilization. And if you look at even a fertilizer like potash, where the government support is very minimal, and the prices are almost as high as 2,200 rupees a bag. So very aware farmers for cash crop, they're still using potash, though the price is quite high.
Got it. So I was just wondering from the pace of shift towards NPK, does it slow it down, or the movement can be back again quickly?
Yeah, it will be back again quickly if the price equation is addressed. See, as long as the DAP NPK are within the price range of 200 rupees a bag, I think the shift can happen very quickly. Currently, it's quite stark, almost 1,000 rupees a bag difference.
And so the other question was on the expansion plan, the phosphate acid and probably the NPK granulation expansion. Any change in plans given what is happening, or that remains on track? Because I believe last time when we spoke in the call, you mentioned the equipment ordering is pending. So I'm just trying to understand where are we there.
Okay, so if you see, none of the plans are getting changed because of the short-term turbulence what we're experiencing. That's a good news for all of us. And second thing is the phosphate expansion, what earlier we said is about 5 lakh to 6 lakh will become a reality by this December. And the 6 to 7 is also going to happen mostly by August, September next year. So current related to the bigger expansion of the 3 lakh ton of phosphate as well as sulfuric acid, that's also going on as per what we have planned. So almost we are in the final commercial discussion is going on. So all those expansion projects are going in a normal way, irrespective of what's happening around us.
Got it. Great, sir. Thank you so much and all the best. Thank you.
Thank you. We have our next question from the line of Saumil Shah from Paras Investments. Please go ahead.
Hi, thanks for the opportunity. Sir, I want to ask, last quarter EBITDA per ton was somewhere around 5,300. So what is the EBITDA per ton in this quarter? And have we started seeing benefits of the backward integration?
So this quarter EBITDA is around 7,000 rupees per metric ton. And last quarter, last year, in the same quarter, it was around 6,500. This increase is mainly on account of the stock, what we have got at the beginning of this year. So that has really played out, and this has given this increase in the EBITDA margin.
Also, if you look at it, our backward integration of sulfuric acid, which is happening in both Mangalore as well as Paradeep, both are actually running the full stream. So coupled with the inventory which we had able to harness within our system in terms of raw material inventory, coupled with the backward integration started coming up.
Okay. And so can this 7,000 range sustain for the current quarter as well?
No, we feel actually a realistic EBITDA for a year could be around 5,000 to 5,000. Once we complete our expansion projects, what we explained earlier, we should be in a position to have a sustainable 7,000 plus.
Okay, and that would be by...
It could come in phases actually. You can take it as 2 to 2.5 years.
Okay. And just one follow-up. You alluded to the previous participant that our phosphoric acid plant's incremental capacity from 5 lakh to 6 lakh tons will be by when?
By this December.
Okay. And what is the current capacity utilization for this plant?
This is almost 100%.
Okay. So we are confident of achieving 1 lakh additional by Q4 of this year?
Yeah. The execution is already going on. Equipments are also ordered and started getting equipments.
Okay. That's it from my side. Thank you and all the best.
Thank you.
Thank you. We have our next question from the line of Dev Gulwani from Care PMS. Please go ahead.
Thank you for the opportunity, sir. So despite industry phosphatic fertilizer volume being flat this quarter, company is able to grow 13% volume YOY. What is company doing different than peers that we are able to gain this market share?
So, if you look at the overall market strategy, we focused in north, east, west, and south in a very balanced way. So we are very strong in west and south, but the overall strategy is to have a kind of balance across the key markets of India. That gives us an advantage, especially when there is a demand effect because of agri scenario. So that's one strength. Second is the lot of market development efforts as far as the brand is concerned. So Jai Kisan Navratna and Jai Kisan Mangla are strong brands with and enjoy a lot of trust to the farmers. So that gives us an advantage as far as the offtake and the cost is concerned. So these are two fundamental things that we do. And our portfolio also, we have kept the flexibility between organizing the range of portfolio. So it's urea, DAP, NPK. So the complete mix is available in terms of solutions to the farmer. So that gives the edge to the company.
Okay. And how OCP is helping in securing raw material during this current tough situation?
That has been one of our key strengths compared to many other players. So we don't face any serious issue or any issue at all in terms of our rock availability. That also in much superior quality rock availability. And acid also. The rock and acid to large extent at least, we don't have any major issue other than some smaller supply chain issue which might come up. But I think overall, because of very good planning of raw material, we have been able to create that uncertainty to our strength.
Okay. And with long-term view of non-subsidy business contributing 20%, so after FY29, we can see capital allocation shift towards other industrial chemicals, right?
Yes, of course, actually, yeah. Obviously, backward integration is the current thrust for us, and entering into specialty chemical dose area. But I'm sure the current ALFP project is only beginning, and we are seriously thinking what else we should be able to do it. This is the shift actually which is really coming.
And last question. And do we produce enough hydrofluorosilicic acid to cater to 15,000 metric ton per annum aluminum fluoride plant?
Yeah, we have actually. We have.
Okay. Thank you.
Thank you.
Thank you. We have our next question from the line of Prashant Biyani from Elara Securities. Please go ahead.
Yeah, Hardeep sir, you are alluding to a higher trading volume that we plan to do in Rabi initially. Can you elaborate on that? What are your plans?
So what we're trying, Prashant, is to augment partly imported DAP. That's more something which the government also wanted to ensure so that the country's supply chain is maintained. So we will be doing some complex fertilizer also, which we are importing, like NPK and DAP and TSP. Because that TSP has also been a product from a long-term perspective. We're trying to build a portfolio of a high phosphate fertilizer with lower nitrogen. So between DAP, TSP and NPK, and of course we have also this year put a lot of thrust on ammonium sulfate, which is a good source of nitrogen and sulfur. And the government wanted us to encourage that as an alternate source of nitrogen and sulfur. So that's the portfolio of traded products that we're doing.
Sir, last year, Rabi season, our traded volume was around 270,000, if I'm not wrong. How much could this year be at?
So I think we're not giving a forward guidance on the exact numbers as of now, Prashant, but it will be significantly higher. That's what I can tell you. Okay. And like I told you, we almost secured a kind of 500,000 tons of imports as far as the trade products are concerned, which will help us from both Q2 and Q3 right up to December.
Sir, how much is DAP trading volume in Q1 and last year Q1?
So this year in the Q1 the DAP traded volumes have been less. So that's just been around some 1,000 odd tons. TSP we did around 24,000 tons and ammonium sulfate 22,000 tons. Last year we had not done any. DAP was just 1,000 tons in the first quarter because we did a lot of manufactured DAP.
Okay. On the subsidy side, how much is the outstanding subsidy and how much have we received in Q1?
This subsidy right now, as on 30th June, the outstanding is around 4,600 crore. And during this year, we have received a subsidy of this quarter around 2,650 crore.
Okay. And sir, how much is the gross debt currently?
Sorry?
Gross debt.
So 6,000, just a second, 6,500.
Okay. Sure, sir. Yeah.
Thank you. We have our next question from the line of Manish Mahawal from Antique Stock Broking. Please go ahead.
Yeah, hi sir. Just in terms of a capex timeline, right? You said a phos acid 2 lakh ton, right, which is 5 to 7. Out of that, 1 lakh is coming by December, and 1 is next August, right? You were saying 27.
Yes, Manish.
Okay. Earlier, it was a timeline was I believe it's H2 of this year, right? I think by Q3 or so, or it has got delayed. Am I missing something in terms of timeline?
It is the same timeline.
Okay. And second thing is capex, which is a bigger capex what we had announced earlier, right? 3,500 or 3,600 crores of capex. What is the timeline of that, and whether it will come in stages or it will come in a one shot?
It will come in one shot actually. They said 29-30.
Okay. What is the timeline for that start?
Yeah. It will be around 29-30 beginning.
29, should we 29-30 in the sense which FY29 we should assume, or March 29 to be
29-30, half mid of the 29-30, maybe Yes. These are the larger projects, so generally there may be some, here and there. So it will be like, second quarter of 29.
Okay, understand. And in terms of when you said a traded, just for this year particularly, when you said a DAP, we have done doing a lot of imports and we wanted to have a DAP. So does it mean basically the manufactured volume will be lower in this year itself and the total volume will grow and definitely manufactured will come down and your traded will offset that? That's a right understanding?
See, what we are trying to do is we are trying to optimize the market requirements. And this is a year where there are disruptions, and it would not be appropriate to put volume to volume comparison just for the sake of volume. What you're trying to do is take stakeholder value. So you're trying to augment between the manufactured and the imported volume so that market share is maintained in the market. But and we will be producing in the plant, but we will not like to produce if the raw material prices are too steep. And if there are supply chain disruptions because of the war.
So any shortage in the production will be made good by this, trading. So overall, there will be no decrease in the sales and other things.
Understood. And last one, sir, in terms of EBITDA per ton, right? Because we did a very good in terms of first quarter, and that has some benefit of a low cost inventory what we have earlier, right? Considering current RM cost in terms of all the 3-4 RM what we have and currency rates, what could be the EBITDA per ton we are able to make a very shortfall of 5,000 rupees? How do you mitigate or any thinking towards the government additional subsidy we expect?
So Manish, I think it's an evolving situation with both the stakeholders, government and industry. But with the kind of interaction we are having, we continue to say that, we should have a sustainable EBITDA of 5,000 rupees per ton. I think that's the number we are looking at the end of this year. And hopefully, with all the coordination that is happening, we should be able to cross that number.
Okay, understood. Sure. Okay, thanks.
Thank you. We have our next question from the line of Aman Kothari from Equitas Investments. Please go ahead. Aman, are you there? No, Aman, your voice is breaking. No, Aman, we still can't hear you. We'll move on to the next participant. We have our next question from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Thank you for the opportunity. Just wanted to understand what was our average landed cost of sulfur in Q1 FY27, and what is the price like now? I mean, can you just give us, if you could share the comparison for the sulfur prices?
So sulfur has moved quite a bit in Q1, and the prices now, as we speak today, is $1,000 plus. As far as our sourcing is concerned, I think it will not be prudent for us to give that number because it's commercially sensitive. But it has been competitive with global benchmarks.
And the current price is what you're saying it is around sulfur is $1,000, right?
$1,000 plus, yeah, $1,000 plus.
Yeah. And what would this price be like in Q1? I mean, on an average, if you could say.
Q1 average was around $800, $850.
Okay, perfect. And can you share the same for sulfuric acid?
Sulfuric acid, right now the price is around $350.
Okay. And Q1?
So Q1 we have not purchased much of sulfuric acid because we have this sulfuric acid capacity 100% utilized. So, but as you asked that what is the price, I'm saying that right now the sulfuric acid price is around $350 to $370.
Okay. So, and what percentage of our procurement is in Q1 FY27 specifically? What percentage of our procurement was due to the long-term contract that or long-term arrangement that we have entered in with the sulfur suppliers, and what percentage was on spot basis?
Currently, we don't have any specific long-term arrangement for sulfur because of fluctuations on both sides. It's happening on the spot basis only now.
Okay, got it, sir. That's all from my side. Thank you.
Thank you. We have our next question from the line of Kush from Care PMS. Please go ahead.
Hello. Yeah, my questions have been answered. Thank you.
Thank you.
Thank you. We have our next question from the line of Sandeep Mukherjee from SKP Securities. Please go ahead.
Sir, thanks for taking my question. Sir, what was the production volumes of DAP, NPK and urea for this quarter, sir?
We'll come back to you actually. The overall, if you look at production, it is the Q1 was 7.66 lakhs.
Okay. Thank you, sir.
And urea is around 2 lakh tons. So remaining we can take it as. Okay. 2 lakh ton of DAP. Yeah.
Thank you.
Thank you.
We have our next question from the line of Archit Agarwal from Step Trade Capital. Please go ahead.
Hello. Hello. Yeah, am I audible?
Yeah, please. Yeah.
Archit, you need to speak a bit louder.
Hello.
Yes, please go ahead with the questions.
Yeah. So my question is, last quarter management guided that working capital build up both inventory and subsidy receivables was largely unwind in Q1 FY27, leading to normalization of operating cash flow and lower borrowing. So could you share the actual progress, how much inventory has been liquidated and how much subsidy has been received, and is operating cash flow positive?
Yeah, I know. So last, what we have told that last quarter we have additional inventory which has been liquidated this quarter, and that has augured well for us. And during this, evolving situation, and this, if you look at the last year, last quarter's, inventory vis-a-vis this quarter inventory, there is a growth, there is an increase in the inventory mainly on account of the trading volume what we are talking. But otherwise, this raw material and finished goods, there is a reduction. And even the debt we have reduced from around 700 crores on an overall basis. And the cash flow is also positive from operation.
Just to kind of also augment, see the cash flow has been both robust as far as the market is concerned. We had a 43% growth in cash flow from the market, and even the subsidy collection was 22% higher than last year for the same period. So we had a robust cash flow, which will help the overall situation.
Okay. And you have mentioned like 2,600 crore subsidies received in this quarter.
Yes.
Okay. Yeah, that's all. Thank you.
Thank you. We have our next question from the line of Aman Kothari from Aequitas Investments. Please go ahead.
Hello. So this year we were in the phase of debottlenecking and expanding our granulation capacity. So when can we see us reaching from 3.7 to 4 this year?
The debottlenecking is actually expected by again December.
Okay.
The contract is already awarded, is going in full swing.
Next year we'll
four will done. And for the rest of the year going forward, as you touched upon that the traded volumes would be significantly higher as compared to the last year. So we would see a margin impact this year going forward, considering trading volumes would be higher.
No, overall, I think we continue to maintain that EBITDA per ton at a company level, and because there are a lot of supply chain efficiencies that have been brought into the system. So overall, we don't think that there is a pressure on EBITDA per tons below the guidance that we have talked about.
Got it. And I think in terms of, I think you touched upon the product mix going forward, but my question there just still remains, sir, that in terms of NPK market, what do you see apart from the price difference could be a value unlocker for us, considering we are the industry leader both in terms of volumes also and pricing going forward?
No, so what, could you just please clarify what exactly is the concern that you have?
So the idea is to understand that what could drive the NPK adoption going forward, just apart from the price difference that's currently there.
So there are three fundamental drivers. See, one is kind of really awareness coming with respect to a farmer in terms of understanding his soil health, and where he is able to understand that there is a need for him to have a sustainable agriculture, both in terms of applying organic carbon and balanced nutrients, both in terms of nitrogen, phosphorus and potash. You know, we have a challenge of overuse of nitrogen in the country. So a significant subsidy and the application of the farmer happens as nitrogen is urea. But we see a robust play for both NPK fertilizers going forward, because a lot of awareness has happened and farmers today feel they're getting better results as far as productivity is concerned when they use a balanced portfolio. So if you look at it, last year the market was around approximately 24 million tons of phosphate, out of which DAP is around 10 and the NPK is around 14 million tons. And out of 14 million tons, the robust NPK grade where your company is like a leader is 2020-013, which happens to be around 6 to 7 million tons. So we still feel that's a very promising grade, because there is sulfur deficiency in the soil, and that's a very, very good fertilizer for the farmer. But today the price difference is there, so which I think is a short-term thing. I don't see that sustaining. The moment I think the government removes the cap on MRP for DAP, I think the portfolio will get balanced.
Sorry to interrupt, Aman. We are unable to hear you. Your voice is cracking.
My question was, is there any possibility for the pricing to be moved, the pricing cap to be moved on DAP?
That you have to ask maybe the political people, but I mean currently it doesn't seem in the short term, but I think somewhere going forward it should get at least removed. That's how we look at it, but not in the short term.
I mean, for the year at 15%. Do you see this as having any impact?
Sorry, Aman, but we are unable to hear you.
No.
We can't get you, Aman. Aman, are you there? Ladies and gentlemen, that was the last question of the day. I now hand the conference over to management for closing comments. Over to you, sir.
Thank you, dear investors, in taking time to join our earnings call. In case you have any further questions, we'll be very pleased to address them through our investor relations team. And thank you once again, and have a good afternoon. Thank you.
Thank you.
Thank you. Thank you. On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.